Good morning, everyone. Welcome back. Today, before starting our in-depth analysis, I will quickly summarize the main takeaways of this video right here, since your time is precious. So, the Coca-Cola company is one of the leaders in global beverages company, with a good reliable business, strong financial positions, and a really good dividend track record with 60 years of consecutive dividend growth. Additionally, when looking at this DCF model, we can see that currently Coca-Cola is above fair value, so in the future it could lead to nice buying opportunities. Now, since the details of this model and the fundamental analysis is crucial, sit back and relax, and let's start with this video, as I can promise you will not regret it. Remember to like and subscribe if you enjoy the content, as it helps a lot and is free to do. If you're new here, to analyze equities, I will use a 6-step valuation process, which consists of the step shown on the slide. Additionally, the DCF model used for the price target will be available to download in the description below. So what is Coca-Cola? The Coca-Cola company is a total beverage company that sells numerous beverage brands that are grouped as the trademark Coca-Cola, sparkling flavors, water, sports, coffee and tea, juice, plant-based beverages, and emerging beverages. As of 2022, they were responsible for 3.4% of all beverages consumed worldwide every day. This is evident when considering that Coca-Cola owns 5 of the world's top 6 sparkling soft drinks brands, which are Coke, Sprite, Fanta, Coke Zero, and Diet Coke. Therefore, what are Coca-Cola's operations? Well, from the slide, we can see the major geographic overviews, where we can see that even though North America is only 17% of the unit case volume, the revenues and operating income coming from North America is 35 to 28%, showing how as Coca-Cola develops and entrenches themselves in these new markets, the economies of scale, distribution efficiencies will give Coca-Cola room for this company to continue growing. The company's growth strategy focuses on an all-weather strategy, with a focus on brand building, M&A, growth management, and execution, leading to a strong long-term organic growth strategy as we have seen developing in the decades of history that this company has. For industry analysis, it is important to understand the competition that Coca-Cola currently faces. Coca-Cola's main competitor right now is Pepsi, with follow-up competition from Monster, Dr. Pepper, and many others. It should be noted that from the price-return graph on the slide, in the last 5 years, Coca-Cola has underperformed its competitors. And this industry is currently known for a high valuation, medium to low growth, but the companies within this industry have a high profitability. When focusing on the main players, we can see that Coca-Cola has a good 1-year revenue growth, however, it is lagging behind on the 5-year compound annual growth rate. However, it also has good profit margins when comparing to their peers. Furthermore, when analyzing the dividends for this industry, we can see how Coca-Cola has a good quant factors across the board, with a good dividend growth, relatively high payout ratio, and decent dividend yield at 3.10%, with an exceptional dividend consistency. For competitive advantages, Coca-Cola has a lot. The first is its global brand awareness. Through operating for many decades, Coca-Cola managed to create a brand around the main drink, Coca-Cola, where customers know what they will get, and there is no direct competition for that specific taste, leading them to entrenching themselves in the different market that they operate in. Secondly, over the scale-up over the time Coca-Cola operated, they created an extensive distribution network where with economies of scales, they entrenched themselves in the market, lowered costs and improved operations. Thirdly, Coca-Cola's geo-specific marketing strategies, which are targeting the different cultures with different types of advertising, is leading them to effective advertising that is enabling them to get again entrenched in the developing countries, increasing their total addressable market for the future. And finally, as I will talk about later in the video, Coca-Cola is in a good financial position with a solid balance sheet. Coca-Cola's CEO is James Quincey since 2017. He began his career in Coca-Cola in 1996. And before, he worked for the Calchas Group and McKinsey. The financial situation of Coca-Cola is healthy. When comparing Coca-Cola with its main competitor Pepsi, Coca-Cola has a total cash of $11.63 billion, total debt of $42 billion, and therefore a total debt to equity ratio of 163%, which is lower than Pepsi's total debt to equity ratio. Coca-Cola has a high short-term debt of $2.37 billion. However, with their cash position, they're able to withstand the higher debt value that they have. Furthermore, they have a good current ratio, a lower quick ratio, but overall, this balance sheet is healthy. There are four main risks present with Coca-Cola. The first is the macroeconomic factors, specifically inflation and recession, that will hit the economy as a whole, and Coca-Cola will be affected by slower earnings. Secondly, Coca-Cola has a risk of a change in consumer behavior and trends, especially as the world is transitioning to a more health-related trend. Therefore, the demand for sugary drinks could decrease. Thirdly, Coca-Cola already capped out the potential of the US market, therefore it is reliant on the emerging markets for growth. And if the expansion fails, the growth could stagnate significantly. And finally, Coca-Cola has a significant dependence on its distribution network to work smoothly. Therefore, supply chain issues could hurt the economy heavily, and it is a major risk to the company. The price target from the DCF model is $56, where the current price is currently around $59. And as a reminder, the DCF model is in the description below to download for free through the Discord server. This is my 5-year DCF model for Coca-Cola, and this model yields a perpetuity approach value of 45 and an EBITDA approach value of 67. Using the average of these values, we get the price target of $56, and considering the current price, Coca-Cola right now is overvalued by 5%, using my assumptions. And the assumptions used to yield this output is, I extrapolated the revenue growth based on company's guidance, and I extrapolated the cost of goods sold, depreciation, and capex based on historical values based as a percentage of revenues. And this yields to the price target of 56. However, if we go more conservative with the average revenue growth of 4%, which is a more conservative model for Coca-Cola, then the price target drop and Coca-Cola is actually 13% overvalued. And therefore, there is this risk reward on company's execution that Coca-Cola will need to perform as they're forecasting for Coca-Cola to be fairly valued right now. Conclusion. Coca-Cola is a good, reliable business in a good financial position and is a strong dividend player with a good track record. Coca-Cola has risks, therefore check risk and reward for you, but personally, Coca-Cola right now is too expensive at the current prices, and even though it is a good dividend play, I would wait for the scaling area and slowly accumulate. If you reached the end of the video, you're awesome. And if you enjoyed, please like and subscribe as it will greatly help and support the channel. Have a good rest of your day, and I'll see you next time.